Ladies and gentlemen, welcome back to the channel. Today was a slight win for AMC since AMC stock was up over 1%. But tomorrow we have big economic data coming out that will totally potentially change the markets for better or for worse. We have a lot of work to get into here in this video, guys. We have a lot of data. I'm going to give you an estimate of what I think is going to happen coming tomorrow, what the data is going to look like. We're going to break down Wall Street's estimates, all of that here in this video. So hit that like button and subscribe to the channel if you guys have not done so already. And let's just go ahead and get right into it. So AMC stock was green today. The markets were green today. Because why? Well, we really didn't get much for economic data. We really didn't get too much at all. Big tech really outperformed today, right? Like an Apple up 1.19%, Microsoft up 0.5%, Tesla up around 0.5% as well. Google up 5% or so. Lots of big tech names did well today. That really took up the broader index. If you're looking at the average stock, some are doing good, some are not. So it's not all peaches and roses across the board. Not like the NASDAQ would suggest, up 1.5% today. The Russell up about 0.5%, and the S&P up almost 1%. It's not quite that strong across the board, but definitely some bullish momentum is out there. And again, AMC stock was up over 1% today. GME up about 3% as well today. That was great news following GME's earnings. If GME rallies after earnings, you tend to get quite the continuation rally. So we'll have to see what happens here. There's talk that Ryan Cohen might start buying shares of other companies as kind of a alternative growth strategy to GameStop, and that could be very interesting. GME could turn into, to some degree, like a hedge fund. Yeah, kind of crazy. But nonetheless, tomorrow is all going to be about the data. Now, you could make an argument that stocks today also bounced because you've been falling recently, right? If you go ahead and you pull up the triple Qs for an example, I mean, you kind of fell over the last couple of days. Now you're back trading kind of sideways. This is where you have been since like November 20th. So it's been a couple of weeks, and you're really at a breakout point. If you get above this line right here, you could start to break out to new highs. Maybe we need the confirmation from the economic data coming out tomorrow. Now, I will say the data coming out tomorrow could have two effects. One effect could be recessionary. In that case, I would expect the indexes to do better, right? If it looks recessionary, and if you have to be allocated to stocks, you're going to be in your Magnificent Seven, or call it the top 10 largest names in our markets. These are stocks that are not really interest rate sensitive. Google, Amazon, Microsoft, Nvidia, even now for that matter, Apple, right? These are not interest rate sensitive stocks at all. That's why they did well in 2023, is because people are like, hey, if we have to be allocated to stocks, if there's a decent chance of a recession in 2023 or 2024, where do we want to be? Well, obviously, Apple's, Microsoft, Google, Amazon, right? Those kind of names. If you get data that suggests maybe things are weakening, but no recession, then your average stock is going to do well. Your interest rate sensitive names will do very well. Now, AMC is one of your interest rate sensitive names. AMC really benefits from rates going lower, and will benefit from rates going lower when they are able to refinance and go to capital markets and raise capital cheaper. Now, let's get into this data here coming out tomorrow. So 8:30 in the morning, you're going to get the non-farm payroll report. Now, we'll go ahead and refresh this just so we have the most up-to-date estimates from Wall Street. Okay, so you're expecting 180,000 job ads. This estimate is pretty high. It's a pretty healthy estimate. This is for the month of November. Now, your ADP employment change was expected at 130,000, came in at 103,000, so it came in lower than expectations. Odds are this will as well. Odds are I think this will come in around 150,000, maybe 160,000 jobs. just weak enough to say, hey, we're definitely seeing a slowdown, but not enough to say, hey, we should just be in mega cap tech because we're seeing a real slowdown. Like if this number comes out at 100,000, markets might say, hey, this is kind of bad. We might be heading into a recession. In that case, I would expect the indexes to do well because big tech would probably do well. If this number comes in at 160,000, 150,000, I would expect small mid-cap stocks, interest rate sensitive names to do well, as it looks like a recession is probably not coming if we're seeing that many jobs still being created. Now, the unemployment rate, that's a tricky one as well. You are going to be hitting your highest level that you have seen potentially over the past year. The estimate is 3.9%. You're probably going to come in at 4% or maybe 4.1%. That could spook the markets a little bit. So that's something you definitely want to be watching. I don't know how this is going to, play into things. If we see 150,000 job ads, 3.9% unemployment like the estimate currently is, well, that could be pretty bullish as well for your interest rate sensitive names, because you don't want to see unemployment rise, that much, right? If you go from 3.5% up 0.5% to 4%, like this could be, right? Back during summertime and the beginning of 2023, you were at around 3.5% unemployment. If you rise 0.5%, that has always been accompanied by a recession. So definitely want to be watching that. 3.9 would be the best possible outcome. Even 3.8% would be good because inflation is continuing to fall. You don't have to see the unemployment rate rise as long as inflation continues to fall. Now, you're going to get that data at 8:30 in the morning. It's going to come with a lot of other data as well. Government payrolls, average weekly hours, manufacturing payrolls, non-farm payrolls, private. U6 unemployment rate, that's an interesting one that has been going higher recently. Participation rate, average hourly earnings year over year and month over month. Lots of different data coming out. Definitely want to watch that as well. But the big headline mover is going to be your non-farm payrolls number and your unemployment rate. Coming out at 10 o'clock in the morning tomorrow is your Michigan Consumer Sentiment Survey for December. Now, you're expecting 62 for the headline number. 61.3 was the number last month. So you are expecting things to look a little bit better from the Michigan Consumer Sentiment. This doesn't matter. What matters is your 1 year and your 5 year inflation expectations. So Michigan inflation expectations for the 1 year out are expected around 4.5%. That's up a lot from where you were recently, even at around 3.2%. So you have seen a rise in 1 year inflation expectations. This doesn't make a whole lot of sense considering inflation is at the lowest level it's been in, a year and a half now. So that doesn't make a whole lot of sense. Now, 5 year inflation expectations are expected at 3.3%. This would be another rise from what you've seen last month at 3.2%. So you've went from 2.8% in September to 3% in October to 3.2% in November. And now we're expecting to go to 3.3%. If this continues to rise, that's going to be a problem. This is already the highest 5 year forward inflation expectations that we have seen in the last 10 years. This is getting close to some of the highs that we've seen over the past 25 years. If you break out past 3.4%, you would be at a new 25-year high. Again, why is this so strange? Because even when we had 9% inflation, the estimate for 5 year inflation expectations were not this high, right? The highest you hit was 3.1%. Now you're at 3.2 and going higher when inflation is now around 3%. Yeah, that's a real head scratcher. But this is only one data point, but it is one that markets are likely going to react to. So something you definitely want to watch pretty carefully heading into tomorrow. Now, we're also going to have some earnings here in after hours today. The big one is really going to be Broadcom. Now, Broadcom They are a chip company, right? So if Broadcom has bad earnings, that's not going to be seen as a great thing for the overall chip sector. I doubt Broadcom will have bad earnings, but Broadcom stock is up a lot over the past 12, 18 months or so. So don't be surprised if you do see some kind of pullback. Lululemon will also be reporting earnings today in after hours. DocuSign and Restoration Hardware and Smith & Wesson, those are going to be your bigger names. Vail Resorts also will report. Seems like Dollar General earnings were okay today. It really didn't give the markets a cause for concern. So earnings will still be important. Now let's run through some of this Ortex data. You don't have any option activity that is actually aggregating today at all. That is a little bit strange. Volume today on the call side is 63.88%. Volume on the put side today is 36.12%. So definitely seeing some activity there. If you look at the short position numbers, you do have 10.13% short interest of free float, $136 million worth of short positions. Go ahead and see. 0.87 days to cover, 20.03 million shares that are currently sold short. Shares out on loan, 11.93 million. Cost to borrow, 1.11%. Utilization, 27.39%. A short score of about 54 out of 100. Again, the Stocko Tracker data, you got about 6,000 calls currently in the money, 130,000 calls out the money, 13,000 puts in the money, and about 36,000 puts out the money. Tomorrow, you could get to some degree a mega bounce, if you will, if you do see the, maybe the unemployment rate come in at 3.9 or 3.8%, and the non-farms come in slightly less than expectations, maybe 160, 150,000. That would be your best possible outcome, right? That would show a little bit of weakness, but definitely not spiraling into a recession. That would be really good for interest rate sensitive names. And that could potentially start to push AMC stock higher. If you get above $7 per share, you're going to have 20,000 contracts that do go into the money at the $7 strike. At the $7.50 strike, you're going to have 23,000 contracts that will go in the money. At the $8 strike, you're going to have 22,000 contracts to go into the money. $8.50 strike, you're going to have 10,000 contracts go into the money. And at the $9 strike, you could have 23,000 contracts go into the money. So obviously could give you some degree of buying pressure. I think overall the next couple of days, we either get a break down lower or a break higher. Now, a break down lower could send you down to $5 per share. A break higher could send you to $9 per share. 50-day moving average at $8.60 per share. That's going to be a big level to be watching for. I expect a lot of resistance around this level. If you break out above that into the $9 range, that's obviously going to be exciting. I don't think that's going to happen tomorrow, but over the next couple of days could definitely be a possibility in either direction. If you look at the RSI, that is at 39.75, so definitely on the oversold side, but trying to make its way back up to a more neutral level. Your MACD is pretty neutral overall as well, slightly negative, but not too negative across the board, guys. So that is going to go ahead and do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.